Greetings everyone, this is Dwayne from CFRN. We're going back to March the 23rd. That would be roughly a week ago, 7 days. Today is Saturday, March 31st. Let's take a look at the very first setup that comes along on the morning of the 23rd. We get a bearish cross. Price pulls back to the BBC. Now I'm going to use this tool just to give us an exact reading on price. Okay, 1389. All right, and then on the move down, price drops to 1384.75. Okay. That's from here to here. I can open that up. You can see it a little better. Okay. Now let me explain what just happened. We had a bearish cross. Price pulled back to the BBC. There was some drawdown. Only a tick, but there was a tick. And so from 1389 down to 1384.75. Call it 1385. So what this amounts to is a 4-point drop. Okay. Now there's a secondary pullback. On the secondary pullback, you want to be a little cautious. Here we get a pullback and then we get a bearish close below the BBC. So let's do this. Let's say we were entering on the open of this candle. We go from 1387 to 1380.50. Let's call it 81. So 6-point move from the open of this candle right here to here. 1387 to 1380.50. We're going to call it 81, and we're going to call that a 6-point drop. Now the market on the 4-point drop, it was, if you look down in the red there, 8 o'clock Chicago time. The market had not officially opened yet. On this little touch here, this was right at the open. See this? And on this pullback here, the markets were definitely open. I mean, they were open here. Globex open, Wall Street open. You get my drift. Okay, let's move on. As the morning progresses, it's now 9:30 Chicago time. We get a bullish cross. Okay. And we get a pullback to the BBC here at 85.75. On this first little run up here from 85.75, let's call it 86. We go to 1390.5. Let's call it 1390. So you get a nice little 4-point rally. secondary pullback. secondary pullback, we're going to wait for a bullish close, which is going to be 89.75, and this thing's going to draw down to 88.5. So you've got a 1.25 of drawdown here. And from 89.75, let's call it 13.90. Price goes up to 93. So what do we have there? We have a 3-point rally. Let's keep going. This pullback, if you buy the open of that candle, 13.91, and it goes to a high of 93.25. So at best, you get 2 points. There we go. Just keep rolling along here. Okay, this was on a Friday. This little double line here shows us a Sunday night, March the 25th. Price just kind of drifts higher into the close. Okay. So we're going to go ahead and cap this day right here. Let's go back and pre-market, 4-point drop, followed by a 6-point drop, followed by a 4-point rally, followed by a 3-point rally, followed by a 2-point rally. So 2, 5, 9, and 6 is 15, and the pre-market we won't even count. So we can say that for March the 23rd, there was 15-point potential based on our very basic S&P 500 Emini futures setup. This is our basic setup. The market does this over and over and over. Now, I didn't get into this aspect of it, but look at the CF cycle. When it's red, that's bearish. So we're selling the pullback. Red, bearish. Selling the pullback. Over here, cycle is blue. We're buying the pullback. Okay. Blue. Here there was a disagreement. You might not have taken that. But if you look down below, you've got a blue envelope. If you want to know more about the envelope, then I suggest you go to this web address. And take our free trial. If you come and take the free trial, what will happen is you'll be able to download the platform, the indicators. You'll get to spend 2 hours a day for 5 trading days in the live trading room with us, and you'll find out if you can do what I just showed you. It really is that simple. I'm Dwayne from CFRN signing off. We'll be back tomorrow and we'll recap the 24th. Have a great evening.